of Tool. Does anybody have that one band that does not match your personality? It doesn't match your personality, but they've got that one song. It can be a rap song. It can be a hardcore death metal song. And you just, like, it just gets you. 46-2 has always done that for me. I love Tool. Probably, in my view, the best album in 1993, despite all the great music that came out in 1993. I am not I don't dress like a guy who looks like he listens to Tool. I dress like a guy who eats grilled cheese sandwiches in the parking lot of Fish concerts. I hope you guys are doing well. We're going to talk about natural gas. I've got a thesis, and I'm gonna make you listen to it today. Still letting some people come into the room. Hashpipe still got some things to say. Big Dave has something to say. If you haven't noticed, Scott has lots of things to say. Taylor Moore is saying that he listens to Tool on the daily. Don Kaufman can't help himself, everybody. Filibuster. All right, let's go. Why are you here? Why? We got rid of our. Why are we gone? We got rid of that slide. Hey, you know why you're here. You don't need us to tell you why you're here. So let's just dive right into it. We're going to talk about momentum. All right. So our Russell 2000 reading went negative yesterday, and it was largely built on the back of selling pressure. So we do what we do. Pay very close attention right now to the TZA. TZA. All right. So this is the bearish ETF of the Russell, popping a little bit above its 8-day EMA. But the Russell is what we have to pay attention to right now because has nothing to do with Japan, has nothing to do with China, has everything to do with the fact that this has been a nice, solid, slow burn higher, and a lot of capital rotated into small cap stocks to start the year. You see that right here. You've got eyes. You know how they work. We went to 270 on the IWM from roughly 246 to start the year. That in most years would actually be a pretty good return, but let alone we had it for about 3.5 weeks. The selling pressure has picked up. Now, I want to point something out very important about our momentum reading. It's not really built on the back of, hey, can this keep going? It's really a matter of what is the probability of a reversal. So when we say, hey, it's red, what we're saying to you is the odds of a downturn are higher than the odds of continuing to move higher. And it's largely built on the back of we're just measuring outflows on the Russell 2000. We're taking all of the stocks in the equity index, and we're just putting them on a bell curve, and we're looking at the outside bands. We're going all the way. What's up 7% in the week versus down 7% in the week, up on the month, down on the month, beta 1 to 2. And it sounds overly simplistic, and I get it. People go, there's no way you can predict this. Well, first off, there's plenty of academic data to support this. Secondly, you can read J.D. Henning's dissertation on momentum conditions, 2016. Great paper, changed my view of how markets work. And, we can just look at the track record. When the Russell goes negative, what happens typically is we see money start to flow. You're seeing that in the momentum strength on the Russell, that intraday pressure, those 3.0. What you're seeing is money starts to crowd into this. Regardless of earnings, money starts to flow into the Mag 7 stocks. And the reason that happens is because everybody owns this. Everybody buys this. Passive funds, 1,500 ETFs, leveraged hedge funds, retail who is looking for high margin equities. Money flows into this. This becomes a crowded trade. And it starts to drift higher, particularly around the Fed meetings. Particularly, like, this is going to be the thing to trade today. And what's beautiful about this is the January meeting. When we get to March, we're going to have daily options, 0-date options linked to Apple, Amazon, all through everything, all those big mega cap stocks, if you're not trading zero date, then you're going to be way behind the curve. That Fed meeting, everything that comes with it, you're going to need to start to learn how to do this, because duration in the market is going to get kneecapped. It's going to be about what's right in front of us today. If you're a trader, if you like the adrenaline of it, if you want to learn how to hedge, if you want to learn how to manage money, you have to know how zero date options work. You have to understand how stocks like Apple, Amazon move in the next 48 hours when the Federal Reserve is meeting. This is where the money is. It's not about, hey, what's the highest quality stock? Like, I'm making fun of myself because I'm humble, Don. It's not going to be about F score, Z score, gram score, O score, M score. It's not about any of that academic stuff. It's about price. And the next 48 hours, and you're going to get, this is the first cycle of this. You're going to get 6 of these Fed meetings a year to now start trading zero date. This is exciting. And what we know, predictability, is money flows heavy in and out of these names for the next 72 hours. And we're going to do this 6 times a year. Sounds like we should probably create some sort of concept built around that. Still looking at Don's making fun of my clothing. This is the best sweatshirt in the world. That's all I got to say. Calmer than you are. All right, tariffs are back. Markets pretend that they don't matter, but President Trump has raised tariffs on South Korean autos, lumber, pharmaceuticals, and other reciprocal goods to a 25% level after the South Koreans, it was them the whole time, failed to ratify their trade deal. I'm going to put this at a solid, this will be dealt with over the weekend, but markets are going to treat this as noise because people expect this will be resolved. I know it doesn't seem like it's a big deal, and it probably isn't that big deal. It's a slow news day, guys. I'm pulling teeth right now. I apologize. But the reality is that the equities at the bottom of this list are going to be impacted. There's going to be people positioning around these names. General Motors, Ford, Stellantis. Again, auto margins, export exposure, and whether or not the market actually believes that this is a sustainable thing, you're going to see retail investors panic. Love that. You're going to see institutions reposition their existing positions. So you can take advantage of that. So this is why you got to pay attention to what everybody's doing in our member room. These names that otherwise would not be in the headlines become tradable. You could see 2, 3, 4% moves on names like General Motors, UPS, FDX, just because of the repositioning, and that could be over the next, week and a half. Follow the trend. And if you're bored, then just watch the EWY. Watch the EWY. And watch the EWY. It's just running higher. Money is flowing back into the South Korean economy. Squid Games, everybody. Moving on. Did you ever try to go to bed at like 10 o'clock and then you're flipping through the channels and then Shawshank Redemption comes on? And then you say to your wife, have you ever seen this movie? And she says no. And then you make her watch it. And then you stay up until 1:30 in the morning watching Shawshank Redemption and quoting it in front of your wife. That was what I did last night. Calmer than you are. Yen volatility remains the volatility signal. Guys, they're intervening on their currency. I don't know why you're not paying attention to what we're talking about. We've literally told everybody, hey, they're intervening on their currency. This happened Friday, 3 o'clock. People go, wait a minute, why is the market behaving the way that it is? It's because they intervened on their currency. The Japanese yen found support on Friday at 3 o'clock. And people go, well, they haven't formally announced that, they were selling treasuries and buying the yen. Do you think they announced that? Do you think they literally tell people that? They don't do that. They just act. That's all they know how to do. They'll tell you in like a month. Are you in AIG? Are we in AIG? Why are we not? We should be selling put spreads on AIG right now. We should be looking down around the 66 to 64 level. Not trying to chase AIG. We're just trying to see if AIG trades sideways and it could just hold a bottom. We are at levels on AIG that we have not been since beginning of the year. They have exposure to the spreads. They have exposure to the currency. They're getting beaten up by this trade. Is the market telling us that, hey, the bottom is in on this? Oh, and by the way, are they about to unleash stimulus? The purpose of the market is to print FXY UUP. Watch the UDN. If this is the trend, and we are now above our 8 and our 20-day EMA, the beauty of the UDN is that you can go out to February, and I bet that $18 call on the UDN, if you put a limit order in, it's probably $65. Where do you think the UDN's going to hit? 1880, 1890. Continued weakness in the dollar. This is what intervention looks like. They're not going to call it a Plaza Accord. They're not going to make it dramatic. They're just going to do it. That's the difference between where we are and where we were back in 1985. These were significant events in 1985. People had to get on a plane. They had to talk to the media. Then the media would print it 4 days later. Today, we operate in an instantaneous society. It's just easier not to say what they're doing. People are going to be talking about, I don't know, Minnesota, what's going on with the Oscars. We have too many other things to distract us, so they don't have to provide that level of detail. You think they're going to try to explain currency intervention to people? No. I barely understand that. Watch AIG, watch Met, watch PRU. Insurers are exposed to those cross-border flows. I like selling spreads on an AIG right now. Watch Goldman, Morgan Stanley. Their balance sheets are clearly tied to global liquidity. All right, let me make sure that I didn't miss any questions. Lucky Rose is here. Hi, Lucky Rose. Mark Connor, Mark Bow, good to see you. Rosario, good. Thanks for joining us this morning. Tater Salad. Ayo. I know, we haven't gotten to the runner yet. Metals are responding to systemic stress. Hi. My name is Garrett, and I am a recovering economist. Silver at 111, gold at 50.71. There's a lot of people. It's really fun. What I love about the financial publishing world is there's no shortage of people right now going, I called silver when it was $25. I called silver when it was at $101. I don't care. This was the most obvious crisis in the history of humanity, and no one should be able to take credit. No one. No one. In 2022, when Russia invaded Ukraine and the United States weaponized the currency, they said, your reserves don't matter to us. Okay, so now all central banks around the globe go, oh no, that's not good. Our dollars in our banks don't matter. They can be weaponized at any point. Let's start buying gold. Silver is a different animal. Silver has responded because historically, it lags gold. It is a major metal when it comes to industrial components, particularly AI. And the other thing about this, I don't know if people know this, if we actually are going to do this whole green EV thing with vehicles, silver is the catalyst. It's the most conductive metal in the world. So I think BMW has a battery that's like 35 ounces of silver in it. 600-mile charge, 9 minutes. 600 miles, 9-minute charge. Silver will matter. And now it's not like you go into the ground and you look for silver. It is a byproduct of other types of mining. You can't just increase capacity. So watching this happen was extraordinarily obvious. It's been my most lucrative trade of the last 2 years. But I don't take credit for it. I basically look over there and I go, wow, this was pretty simple, guys. And what I'm doing right now is I explained yesterday, I'm taking profits on this now. I'm going to try to rotate into something else. I want to be out in front of whatever the next big thing is. I think the next big thing is going to be oil and gas, but we'll go from there. But you have to be still trading the GLD, the SLV, the NEMs, the AEMs. There's going to be a lot of volatility in these names. And I don't mean volatility in terms of like what the VIX means. What I mean is there's going to be sharp price reactions, and you have to be honing in on the specific overbought, oversold territories of these names on the 15, 30-minute charts and the 1-hour charts. Ed Mines, hey, bud, it's free, bud. Don't get upset. I get to keep going. It's my show. Earnings week with no room for disappointment. I know everybody's clamoring for the runner. I'm going to get to it. I have to be done by 9:20. I have to give you all those names. It's in my intellectual contract, but I still get to talk about 100 companies reporting earnings this week. Valuations elevated, negative surprises are likely to matter more. Fed meeting today and tomorrow. TXN, Boeing, GM, Meta, Microsoft, Amazon, and Google. These are the big names. And if you're not trading volume weighted average price and you haven't learned about zero date and you haven't understood that, a 3% move up and down on a name like Amazon and Google, when there are leveraged ETFs tied to this, you're leaving money on the table if you don't learn how to trade this. You could pay for dinner, see a movie, pay for that terrible, terrible Netflix. You can do a lot if you just learn how to trade intraday and how to trade post earnings. You're talking 3, 4, 5% moves, and I'm not talking down or up. I'm talking the way that the market operates, because broker dealers are going to have to hedge. They're going to have to buy. They're trying to manage their positions as retail is trying to move in on a position. You don't have to try to make money on the earnings the first 10 minutes, that first move. No, you can take advantage of what happens and the unwinding of positions right after that. The next 10 days on Meta are going to be great. Doesn't matter if it goes up 10%. What matters is that it moves 10% up and down. That's how you make money. That's how you trade. You don't think about what their fundamentals are. You think about, hey, markets are overreacting. Markets are underreacting. We're getting into certain positions. That's what we will be talking about today at 3 o'clock. All right. Hey, Ed Mines, I need you to get all the way off my back. Here's your runner. Text TGB, NOK, you. All right. First off, people look at this chart and they go, oh my gosh, it's going to be selling off. It's going to be horrible. Look, massive insider buying at 4. So, calmer than you are. I don't care if this stock goes from 28 to 23. We have been talking about it on the insider buying front for a while. Is it above its 8-day? Yep. Is it below its 20? Nope. So the key thing here is what you're looking to do. I would love for this to sell off. Please do. Please go back to 15. Are we dumb enough to allow that to happen? Are we dumb enough to allow uranium to sell off right now? I hope so. Because we're kind of in a no man's land with this 8-day EMA. If this does tap that 2041, I am selling spreads down here. 1750, 15, 1715 level. Doesn't matter. I'm in for the long term. I just want to remind you, this is a uranium company with government backing with no debt. I'm in. What about this world implies to you that uranium prices are going down? There is nothing. We are currently overbought. That's what happens. We see some selling. Your line in the sand, you have to write this down, is going to be 2071. If it sells off, sell spreads. Try to get more of this stock in your portfolio, in your long-term resources. TGB. Well, it could mean the Garrett Baldwin, but it doesn't, because Don will make fun of that. Like my haircut and my dress. Okay. Pure momentum. Copper mining. Not a really good option chain on this, but same thing, right? We are following the momentum, and we are looking for the lag on Chinese money printing stimulus. What does that mean, Garrett? Well, China, when it engages in stimulus, is trying to grab its economy by the shoulders and shake it. They are a manufacturing economy. That means when they print money, the price of materials move higher, and it is a direct reflection of copper equities. Copper metals, copper mines, copper. Anything to do with copper tends to benefit from the old Chinese money printing. Back in the day, ancient form of money printing. The point that I'm making right now is you have to recognize that momentum is clearly on a tailwind because of the way that China is performing. And while everybody else is speculating in metals, you see things like Seco Mines, look at COPP, Sprott Copper. The momentum is there. And how do you trade it? You buy it and you set a stop. And you hope that the market doesn't sell off. You hope that the thesis of momentum continues and that there are more buyers than sellers. And okay, what do? Nokia? Ugh. I will talk about U.S. anonymity. At one point, this is a wild story. Did you know Nokia was once the #1 mobile company in the world? And you know why they failed? Because they thought all the money was in ringtones. Apple leapfrogged them in 2008. Nokia is one of these companies that is drastically undervalued. It's a good value buy. I just want to own. I own it. I'm buying it. I'm buying more. And I'm just trying to go from $7 to like $8. You see the momentum that returned to it. There's been speculation about buyouts. It's Finland. I'm a fan. Just buy the stock, set a stop back here at the 50-day EMA of 640. That's a 10% drop. CHPT. Well, I thought it was Chipotle, but it's actually ChargePoint Holdings. Hey, this company sucks. This is going bankrupt. This has a high short interest of 19%. Lower highs, lower lows is the norm. And that 8-day and that 20-day is where you want to keep your focus. The slow burn is clear. If you're shorting these high short interest stocks, you want to make sure that your delta is high. So that's where you buy like the February $8 put. It's at 667. It's just in case that this does squeeze. You are protected. And you protect yourself with a higher delta. Not speculating at the 650 level, $6 level. This is the clean way to focus on delta and erosion of equities. This thing sucks. I'm out. Short VAC into the ground. Marriott Vacations Worldwide. Get out of my country. Buy the 60, sell the 50, go out to February. Good? AEO. I don't get it. I don't. You have to get under that 50-day EMA, 23.92. When you hit that level, then you could start to short. You stay in the money. You buy the 24 put. You go out a week, week and a half. But you have to manage this trade. You're looking at the potential of a 3 to 4% move in a day on an AEO. This is a intraday trade. We're 2 days behind it. We missed that flip on the 820. And now we are hitting that EMA, that 50-day EMA. Watch list. Hey, this company, what are you guys doing? This thing got doors blown off. Some guy thought he was a freedom fighter, and he released President Trump's tax records. But it was like 6 years ago. So now the Treasury has canceled their contracts. What's the lesson here? Well, first off, whatever, man. I don't care. I literally don't have enough time to care about politics at this point. Trying to go outside and plant some fruit. What does BAH represent? It represents grift. It represents, hey, let's get close to the United States government because we suck at everything else. BAH is a pure representation of, hey, the Republicans hate it and the Democrats love it. That's it. Let's just spend money on whatever the hell it is they do. I don't care. I want you to write this name down. We have elections coming up. We're not going to spend more money on this, but if the Democrats win in November, go long BAH. And if the Democrats win in 2028, buy BAH. And if they don't, short it. That's the thesis. No politics here. That's it. That's it. No politics. This is how the world works. UNH got crushed. GME. It's up. It's running. Two competing sources on this. First, there was a massive Massive insider buy on this equity. In the last couple of days. It was the 23rd. And that is Lawrence Chang, everybody. 114,000, but really the big one was January 20th. And that was President, Chairman, CEO Ryan Cohn. $21 million. $21 million. That is conviction. That is a huge amount. Remember, the executives are buying their own stock. They're not being paid in the stock. Cohen is already compensated in many different ways by GameStop. I don't know where to go with this. I wonder if they have been spying on me buying baseball cards at GameStop. $21 million in cash, puts it down, files an SEC Form 4 document that shows I'm buying the stock, I'm betting on the long term. And then Michael Burry announces he's been buying it too. It doesn't matter. $21 million. $21 million. He bought $21 million of stock. You don't buy $21 million of stock unless you expect it's going to go up. It's not performance. It's a lot of money. And then Michael Burry, Big Short fame, deep value investor, is buying GameStop. He's done this twice. It's the second time that he has bought into this. You see all the moving averages. You see the way this stock is moving. And you can do one of two things. You can buy the stock. Cool. The EMA, the 20-day EMA, is at $22.05. So you can buy the stock at $24, and you set a stop of less than 10%. And then you just basically trade around that 20-day moving average. If it's above it, you buy it. If it's under it, you short it, or you just don't even do anything. Or if you are a guy who likes to watch what is going on with insider buying, go out to February, right? What are our key levels here? Well, it really is that 50-day that has my attention. You can sell the $21.50 for February, $21.50 put for February, around 42 cents. And then I can buy for protection the $20 put. And what does that give me? Okay? This is the trade today around GameStop, around Cohen, around Burry. High probability, looking to make a little bit of money. And I'm going to wrap it up in a moment, Don. Don't make fun of my shirt, my haircut, or tool. Unless you can say whatever you want about me, but you leave Maynard alone. I will fight you in the street. 21.26 is your break even for this trade. You are going to be writing the $21.50 for February 20th and buying the $20 put. $21.50. Very important to note that. That is what is in the options chain. $21.50, you write that, you buy the 20, February 20th, and it gives you the following math. Break even is $21.26. The probability of profit is 81%, and the max return on risk is 19. That is the strategy. 80% probability of profit, targeting a 20% return in the next 45 days, annualized over 100%. You are looking at a stock that would have to fall another 10%. Burry's buying, the CEO's buying. Don't chase it to the upside. Take what the market is giving you under all of these key moving averages. It is 9:21. That means Don is coming up right now. Don is not going to listen to Tool because Don listens to music from the old times. Probably going to listen to Panama. 9:21, I am out. I will be back at 3 o'clock today, as always. If you are not a member of TheoTrade, what are you doing? Get it together, man. You have live trading education every day from 9:30 until 4 o'clock. I'm pretty good, but I'm more a big macro econ. I want to listen to what Don has to say at 9:30 about volatility. I want to hear what Brandon has to say about unusual options activity. I want to hear what Gianni has to say about momentum. Name your price. Click the link. Get in the room with us every day. I don't know how to make it any easier. We're doing everything that we possibly can to inform you in one of the most radical periods of time in economic history, financial history. You got to learn how to take advantage. And that is why we're here. Thanks, guys, for joining me today, 9:22. I will catch up with you in a little bit. Here's Don playing music from the old-timey